Hello, everybody. Welcome to today's webinar about accessing capital for your small business. My name is Meredith Medlin, and I'm so glad that you've joined us for this conversation today. I serve as the Director of Partnerships and Impact for Accion Opportunity Fund, and we are a national nonprofit that provides affordable loan capital as well as wraparound business resources to small business owners across the country. We have a specific focus on entrepreneurs of color and women entrepreneurs as well. So before I introduce today's speakers and we begin this really important conversation, I want to quickly go over a few housekeeping items with you, just so you know how to navigate our digital space here. So first, you should be able to view our presentation through the Zoom webinar tools window if you've joined us by computer or mobile device. If you're on the phone, we will be sending the recording to you later today so you can see the visuals as well if that's of interest. If you've joined by computer, you will see a chat function in the Zoom Windows black toolbar. So please use that chat button to type any questions you may have throughout the presentation. We encourage a lively chat box because that's how I will administer our question and answer session following our presentation today. So we welcome your questions. We're excited to answer them in the chat box there. Also, as you were likely notified, we are recording today's webinar, so you can refer back to this information at a later time. So as I noted, I'll send an email containing a link to that recording within the next day or so you can refer back both to the visuals and also to the wonderful insights that our presenters are going to share today. Lastly, when the webinar concludes, you will be prompted to complete a very short, I promise, 4-question survey about today's presentation. And we really value your feedback. So please do take just a couple of minutes to give us your thoughts on this webinar once it's finished today. All right, today's discussion, as you know, will center around some of the most important things for you to keep in mind as you explore capital options for your business. So today's presenters will walk you through not only how to make sure your business is ready for an influx of capital, but also how to evaluate the various possibilities and find the best fit for your situation. We are really excited to get started, but before we dive into this discussion, I'm pleased to introduce my colleague Philip Henry from Fifth Third Bank, who will share a bit about the bank's commitment to community. Thank you so much for being with us, Philip.
Thank you, Meredith, and good afternoon, everyone. I'm Philip Henry, Corporate Social Responsibility Manager for Fifth Third Bank. And once again, thank you for joining today's webinar, Preparing to Access Capital for Your Small Business. Our third small business webinar of 2021 in partnership with the Accion Opportunity Fund. We want to advance the slide. Please advance the slide. There we go. Thank you. Our commitment to put business customers at the center of everything that we do is a driving force behind our ongoing collaboration and partnership with Accion Opportunity Fund. Together, we share a common goal, and that's helping entrepreneurs overcome barriers and achieve business growth by expanding access to capital and educational resources. Fifth Third Bank, in collaboration with the National Community Reinvestment Coalition, made a commitment to invest $32 billion into the communities that we serve through 2020. We have exceeded our commitment with significant help and engagement from community and business partner organizations such as Accion Opportunity Fund. As you can see here from the slide, we have completed that 5-year plan. Fifth Third Bank is committed to all of the markets that we serve. Several hundred entrepreneurs have been helped through our support of economic development programs, including technical assistance and micro lending for small businesses through partner like Accion Opportunity Fund. If you're launching your business or expanding it, our team at Fifth Third and our resources are available to you every step of the way. Please visit our Business Resource Center at 53.com and let us help you meet your financial goals and assist you with smart financial solutions for both your personal and business needs. Thank you so much for attending today's webinar, and back to you, Meredith.
Wonderful. Thank you so much, Philip. We are so grateful for our partnership with Fifth Third Bank, and we're excited to get started with this discussion. So now I'm pleased to introduce today's panelists, which include my colleague, Shanna McLearn, who's our Director of Working Capital and Community Partnerships at Accion Opportunity Fund. Thank you so much for being here, Shanna.
Good afternoon, Meredith, and everybody on the call. Thank you for having us.
All right, I'm also excited to welcome my colleague, Adriana Williams, who serves as a partnership manager here at AOF. So glad to have you with us, Adriana.
Thank you, Meredith. Thank you, everybody, for joining us today.
In addition, we're also pleased to welcome Juan Guevara from Fifth Third Bank to today's discussion. Hi there, Juan. Thanks for being here.
Hey, thank you for the invite.
Wonderful. All right, so let's go ahead and get started with our conversation. So first, I'm going to turn things over to Shanna to discuss getting funding for the business. So these are the three topics we're going to discuss today. And so Shanna, you can kick us off with formalizing the business finances.
Yes, great. Thank you, Meredith. Yeah, today we're going to share some best practices with you to help you prepare to access the capital you might need for your business. First, we'll talk about formalizing your business finances. Then we want to make sure that you're as prepared as possible when it comes to actually matching your credit history to your financial needs, exploring your funding options, and then finally applying for the loan. There's a lot to learn here, but we'll do our best to keep things as clear as we can, and feel free to ask questions in the chat as we go along. And on to the next slide. Yep. And so like I said, first we're going to talk about formalizing your business plan or business finances, excuse me. And on the next slide, we'll see the first 6 steps needed to formalize your business. Many of you may have already taken these steps to formalize your business, such as creating a legal structure and a name, getting a tax ID, and setting up a business bank account. If you haven't already taken these 6 steps, we really recommend that you do it sooner rather than later. These steps not only will help your business be more attractive to a lender, but may also open doors for new growth opportunities like supplier contracts, brand partnerships, and further expansion. So in addition to these steps of formalization, it's really critical to make sure that your business finances are in order and that you understand them. So because you want to know how much money you're making and spending and how much you'll need for your future goals. Next slide, please. So the first step, business financial statements are the core documents to assessing the health of your business. A profit and loss statement, also known as an income statement, gives you a financial picture of your business activities based on your revenues and direct and indirect costs. A cash flow statement shows the changes in your business's cash position over a period of time. So it's vital to understand cash flow when you're assessing how much working capital you need. And lastly, a balance sheet is essentially a snapshot of the business financial position at any single point in time. And all of these 3 financial documents, along with your business bank accounts, are part of the package that lenders want to see before making a decision on your loan application. Thank you. And speaking of the loan application, let's discuss some of the different funding options that you could apply for. I'm sure all of you know that there are many options available, but sometimes it can be difficult to find the right fit for your circumstances, and it can get really confusing. So hopefully what we share today will help you. And I'm sure I don't need to tell you that it can be very difficult to manage limited cash, especially when your business is starting up and getting on its feet. So your first financing option really should be using your own personal savings or reaching out to your network for startup support. But as a business grows, more formal financing may become available. The challenge here is that many banks only offer small businesses larger loans and expect to see more established credit histories. And these banks sometimes bank loans don't make sense for many entrepreneurs. And in that case, alternative lenders fill in the gap between personal savings and traditional bank financing. And these less traditional lenders come in all shapes and sizes, and we'll review them as we go further into this presentation. This graphic, I know on the next slide, has a graphic that visually demonstrates the spectrum of financing options that I just mentioned. There's a lot going on, but you can see that newer businesses on the far left with less established credit history can access working capital through friends, family, and personal assets. And then as your business grows, alternative lenders will likely be a stepping stone to a traditional bank or SBA lending, which is usually has the lowest interest rates and the longest repayment terms. And we'll just focus for a minute on in the middle of the spectrum here on alternative lenders. Community lenders like community development financial institutions or CDFIs offer more flexible lending criteria than banks. And Accion Opportunity Fund is a CDFI, and Adriana will be talking more about that later. And as you can probably, or as you've probably seen, there are a lot of online companies that offer merchant cash advances or factoring products or other financing options, and they make it very easy to get those. But these options can work well for certain businesses, but many of these online companies aren't very transparent about their rates. So you'll want to be super careful and read all of the fine print before signing on the dotted line. And so how can we avoid getting into these costly situations? It's by asking a lot of questions. And the next slide has a giant wall of questions, which may look a little bit intimidating, but if we could put up the next slide, please, we'll take a look. Thank you. We really encourage you to get into the details of the loan that you're considering. You really want to make sure that you understand what you're signing up for. So although there are a lot of questions here, it is critical to your decision-making process to make sure you understand these. If a lender doesn't have questions to these, or sorry, if they don't have answers to these questions readily available, we recommend that you dig deeper until you feel confident that you fully understand the loan's interest rate, how it's calculated, repayment terms, fees, and other features. If you ever feel like someone is withholding information from you, or if they can't explain it properly, or they're not being straightforward, consider looking elsewhere. There are lots of lenders out there. Don't trust the future of your business to someone who won't be straightforward with you. And the next slide is also some additional things about what you should be considering when you're looking at all of your different lending options so that you can narrow down the possibilities. Our advice is to use the financial documents that we discussed earlier to fully understand your financial picture and match the loan's features to your situation. And make sure you can really afford the payment amount, including interest and fees, as often a lender will require you they may require you to pay on a daily, weekly, or monthly basis. So, and make sure you understand the documentation as we talked about, any collateral requirements or guarantees. And before you apply, not quite done yet, but before you apply, make sure your credit profile is a good fit for the financing product itself. And for instance, if a lender advertises that they won't lend to people with credit scores of less than 700, and you have a 650 credit score, you may not want to spend your time on that application. And it is important to also just check your credit score before applying so you know what's on your report. And as we mentioned before, a CDFI or an alternative lender may be happy to work with your credit depending on what's on there. Sorry. And lastly, we've got 2 more tips to share with you about the assessment of your potential loan. If at all possible, set up your loan payments for an amount that doesn't eat into your working capital too much, and make the payments when your cash flow is at its highest point so that you're not strapped for cash when the payment goes through. So now that we've gone through all of these different options, now that we've gone through all of these different options for financing and how to assess them, we'll turn to that actual application process and Adriana will take it from here.
Yes, thank you, Shanna. So once you formalize your business finances and explored your lending options, you're finally ready to apply, right? And I know that all these steps that Shanna had gone through sounds like a lot of work, and it definitely is. But when you can do your research and prepare yourself ahead of time, you'll be more successful. So first and foremost, lenders want to see that you have the cash flow to repay your loan on time. Some lenders will consider your future projected cash flow, but most lenders really want to make sure that you currently have the money to make the necessary payments, whether it's on a daily, weekly, or monthly basis. So we'll review some of the other things that lenders look at besides repayment ability. Next slide, please. Okay, so when a lender is evaluating your ability to repay the loan, they're looking at three important things. Number one, your recurring income. Number two, your debt payments. And lastly, your savings and cash flow. So your income comes from business revenues, wages from another job, and wages from other people in your household, perhaps. The important thing to keep in mind is that income from people in your household is typically only considered if that person is providing a personal guarantee on the loan. So in other words, they would have to co-sign on that loan. So keep in mind, the lenders usually consider your gross wages, but it's a best practice to use your take-home pay when setting spending budgets. A second item, debt, right? Your debt is reviewed in terms of your monthly payments compared to your monthly income. And typically, lenders focus on your minimum monthly payments. However, some banks will sometimes estimate your monthly payments based on your total outstanding debt, especially related to credit card debt. So most lenders want to see that your monthly income exceeds your monthly debt payments by 25 to 50%. And then lastly here, cash and cash flow rule the day. Cash is king. Having business or personal savings is always important. And given the hardships we've seen during this pandemic, we recommend building savings to cover at least 6 to 12 months of your expenses. And although total assets are taken into consideration, many small business lenders want to see sufficient cash flow from the business to support the loan for established businesses. And for startups, other sources of income and savings may be given more weight. Next slide, please. So besides your cash flow, lenders are also reviewing your credit score, available collateral, and your connections. So your credit score consists of your personal and your business credit history. It's preferred that any debts, including credit cards, auto loans, mortgages, and business loans, be paid on time at least for the last 6 to 12 months. Common forms of collateral include a UCC filing, which is a general lien on all of your business assets. It may include accounts receivables, inventory, equipment, vehicles, or real estate. In general, the longer your loan term, the more collateral you're going to have to pledge. And lastly here, connections, they consist of your time in business and your network, such as your existing relationship with your banker or lender, your website, and social media presence and reviews. Another C, which is not mentioned on this slide, is conditions. Be sure to show that there's a market for your business and a clear purpose for the loan. Base your arguments on the type of industry and your experience in it, and also your experience managing a business. Next slide, please. All right, thank you. So this slide has a list of the most common items included in a loan package. We've covered some of these items earlier in the presentation, like your financial documents. So another item to keep in mind is that background checks are typically performed for larger loans over $100,000. They're used to uncover any previous bankruptcies, judgments, liens, or criminal charges. If you have any of these items in your background, it's important that you disclose them to your lender upfront. For some lenders, it may result in an automatic decline, so you want to know that before you invest a whole lot of time with that lender. For other organizations that are more flexible, it's viewed much more favorably when you disclose it voluntarily instead of the lender finding out through a background check. And also, the statement of use is just a breakdown of how you're planning on using the loan funds. Many small business owners just say that they want a loan for working capital. However, some lenders want to know more specifics, such as how much of the funds are going to inventory, how much is going to payroll, marketing, or a vehicle purchase. And this also may help the lender identify specific programs or products that may be best suited for your needs. So now, I'd like to turn it over to Meredith.
Wonderful. Thank you so much, Adriana and Shanna, for sharing all those insights. I feel like I've learned so much already, and we've got folks in the chat who are interested in seeing the slides again. I think especially those checklists and things are really helpful. So thank you. And now we want to make sure that our audience who's joined us today is familiar not only with these processes and considerations, but also with how the two financial institutions that are represented on the call today could potentially support their businesses specifically. And so I'd love to bring in Juan Guevara again. Would love to hear from you, Juan, about how Fifth Third could potentially support small businesses with their offerings.
Hey, good afternoon, everybody. I'm Juan Guevara, small business community lender here for Fifth Third Bank. And today's topic, we're going to talk about the importance of having a relationship, because Fifth Third is all about having a relationship and how important a relationship impacts your business and your structure. So one of the things that we provide is the greatest tool for success. As your business evolves, we're here to offer experience, guidance, and dedicated support to help you manage your business for greater efficiency, keep your business on track, take care of your finances easily and securely, attract and retain and reward employees. Next slide. Now, this is the part that I really want to spend a little bit of time, because this is very, very important. Have you asked yourself, why starting a relationship with a financial institution is very important, especially on your startup stages? Let's start with number one. Relationship banking means better rates, terms, and structure. That is very, very true. Having a relationship with a business banker can help you structure exactly what you're looking for. Sometimes us as a business owners, we tend to think that we know we need a term or a line of credit or such products, but sometimes we need the expertise of a business banker to guide you what structure makes sense for your future purchase or future financial goal in this case. And yes, rates does make a difference, so it will help you structure better and have a better rate to make a decision and have a better structure of a loan that makes sense for you. Number two is relationship banking means less fees. For those of you who have probably had the experience of complaining about why they're charging me these fees, why these fees, it doesn't make sense for me. That's the importance of having a business banker relationship, because they will structure exactly what makes sense for you, what benefits your company and makes sense for you, instead of getting those unnecessary fees that doesn't make sense. Third, customer can have access to relationship banker network, and that's true. I could speak to a quick testimony of a general contractor that recently just applied to become a authorized builder for us. And yes, it is possible. So we have the connectivity with other business lender. You become that general contractor when it comes to more leads or people are asking. You become that restaurant. You become that doctor. You become that CPA. So we get to share our network and our connectivity with other business and help you advertise your business. So having a good relationship with a business banker means more leads too. And fourth, when you're talking about relationship banker have valuable insight and strategic planning, that is correct, because us as Fifth Third Bank and other institutions provide a strategic way to planning your way for success, either if it's a startup business, if you have future expansion or buying a second location. We will guide you, we will support you, handheld you through all that process on how to prepare for that lending need in this case. So having a relationship with a bank or institution means a lot. So take advantage of your institution if you already have a relationship. If you don't, you're more than welcome to visit us. and we'll provide you at least a business banker that is fully dedicated to help your business grow. Thank you so much for your invite. Pass it back to Meredith.
Wonderful. Thank you so much, Juan. I totally agree that the relationships are so critical for financial institutions with small business owners. It just makes all the difference. So I appreciate your insights there. And now I want to hand things back over to Adriana to share a bit more about how AOF can support small businesses in a really complementary way to Fifth Third Bank.
Yes, thank you. So yes, I'd like to take a few minutes to tell you more about Accion Opportunity Fund, which is the organization that I represent. We are a nonprofit small business community lender, a community development financial institution, as Sean had mentioned earlier. And this is a designation given to us by the US Treasury. And in order for us to keep this designation, we have to keep serving the underserved communities. And so, yeah, we are headquartered in San Jose, California. We've been operating for over 25 years. And Accion Opportunity Fund, we worked very hard to create an inclusive, healthy financial system that supports the nation's small business owners by connecting entrepreneurs to affordable capital, educational resources, coaching, and networks. And through innovative partnerships and outreach strategies, we reach entrepreneurs of color, women-owned businesses, and low to moderate income communities. And these are the underserved communities that we serve. And they often lack access to the financial services they need to build and grow their businesses. Some of our advocacy work includes a Small Business Borrowers Bill of Rights. So we are a huge champion for transparency. Next slide, please. And in our history, we've invested over $1 billion in small businesses and communities across the nation. And with every loan, our goal is to create and retain jobs and increase economic activity through revenues and taxes. In fiscal year 2020, we provided approximately 2,778 loans to small businesses across the country. Next slide, please. And as you can see here, Accion Opportunity Fund, we lend in 45 states, not including the District of Columbia. And here's some information on our clients' demographics. We're focused, as you can see, to lending to more women and minority entrepreneurs. However, we lend to all groups, of course. Next slide, please. And now I'd like to talk a little bit about our working capital term loan product, which provides funding of up to $100,000 with regular monthly principal and interest payments. Generally, we see that small business owners can afford loans of up to 1 to 2 times their average monthly revenues. So for instance, if your business is grossing, let's say $10,000 a month in sales revenues, the maximum loan amount we would consider you for would be about $20,000. Terms are up to 60 months with interest rates starting at 5.99% fixed. And most of our borrowers, the purpose of the loan really is to either make tenant improvements or to hire additional staff, purchase inventory, open a second location, etc. We do require at least 1 year in business and a minimum annual revenue of $50,000. We will also lend to ITIN holders. And in general, Accion Opportunity Fund, we have flexible lending criteria, given that we are a CDFI, and we are trying to help small business owners with affordable alternative community financing when a small business owner may not qualify a loan through a bank. So to learn more about our program, please feel free to reach out to me directly. I know with the last slide, which is coming up soon, we'll have my contact information. Next slide, please. And yes, Accion Opportunity Fund, we are also a participating lender in the SOAR loan program, which is subsidized by the 16 different states in the southeastern part of the country, which includes states like Florida, Georgia, Tennessee, North Carolina, and West Virginia. The program is targeted towards businesses that have suffered a decline in sales revenues due to the pandemic. And the SOAR program is really fantastic. The interest rate is at 4% fixed, and the loan amount can go up to $100,000. In order to be eligible, the business must have at least generated $20,200 in sales revenues in 2019. I know that's an odd number. So please visit the SOARfund.org for more information. We highly encourage you to select Accion Opportunity Fund as the lender because we are ready and able to serve you. And yeah, I'd love to share a recent success story of a business owner based in DC who was approved for $100,000 through SOAR. His business revenues had suffered tremendously due to the pandemic, but he had a strong business to begin with. He'd been in business for a long time, and his sales had been trending upward. So it was really over the moon when we were able to help him with a working capital loan through SOAR. So next slide, please. Yeah, again, please feel free to reach out to me if you have any additional questions. And yeah, next slide, please. And this concludes our presentation. And I want a special thank you to Fifth Third Bank for giving us this opportunity to present today. And thank you everyone for being here. I'll turn it over to you now, Meredith.
Thank you so much, Adriana. I am so pleased, especially that you wanted to call out the SOAR program, because it's a COVID relief, sort of a new and temporary program for business owners in those specific states. And I dropped the link in the chat. So if anybody's interested in learning more about the SOAR capital, they can use that link to jump over there and find out more. But I think all of the information that all three of our panelists shared today is so helpful when thinking about accessing capital. So I'm excited to turn things over for questions in the chat box. So we've had a few different questions come in already, but I encourage everybody, folks, if you have additional questions, please drop them in the chat and we will do our best to answer everything. So one of the questions that we had in the chat that Juan, I think you also answered in the chat a little bit for us as well, has to do with, excuse me, access to capital based on the borrower's credit versus the business credit, and kind of understanding what the assessment would be there. And so we have this question about if you have to use your personal credit or if you can use the business EIN only. And one, I think for Fifth Third Bank, you said the business entity would be the borrower, but the owner would be sort of the signer as the personal guarantor there. And then Fifth Third also provides lines of credit to build out the business credit. Is that correct, Juan?
That is correct. There was a question stating that if their personal credit is going to be utilized. Yes. It depends on certain situation, but it's very rare. But on most of the cases, the actual entity, which is the business, is going to be the borrower, and the owner is going to be the guarantor, the signer. And yes, your personal credit will be utilized to determine, obviously, approval. But there's certain circumstances, a non-for-profit organization, which is an organization that doesn't require a guarantor. The business can be utilized with no guarantor, but special occasions.
Got it. Okay. And Shanna, how is that different or the same as AOF's credit requirements on the business being the borrower, but using the personal credit? Is that the same, or are our requirements a little bit different?
They're pretty similar. So similar to Fifth Third, Accion Opportunity Fund will provide the loan in the name of the business with the personal guarantee from the owners, anybody with up to 50% or 51% ownership. And we do report our loans on personal credit. It is as a commercial transaction with personal guarantee. And we also report on business credit. The business credit is on Business Experian, and then personal credits reported to all three credit bureaus, Experian. The other names are totally escaping me right now.
TransUnion, Equifax.
Yes, thank you. So in many cases, we know as an entrepreneur, your credit may have some blemishes and bumps along the way, and we're hoping that by establishing an on-time payment history with us, it can show a positive record with a lender that will help you to your goal of being able to graduate from a lender like Accion Opportunity Fund to a bank like Fifth Third. So, and having that on-time payment history and helping that increase your credit score can certainly help you in that goal.
That's great, Shanna. And you actually answered a couple of questions in the chat with that explanation, because we had folks asking about building their credit or what kind of loan can help them build the credit. And that's what we're here to help do. Great. So we had a couple questions regarding geography, and I think I can clear these up, but Adriana, help me if I miss a state that's involved in SOAR. So we had a question about if AOF serves businesses in Indiana, and we do, as does Fifth Third Bank. And then for the SOAR program, somebody's wondering if that's in Ohio, but I think it's only states that are south of Ohio. Is that correct?
Correct.
Right. Okay.
Yes, correct.
Okay.
So unfortunately, Ohio is not part of the SOAR program. Yeah, however, I know most states have launched their own disaster relief programs for small businesses. I'm not aware if Ohio has, but I'm sure, you know, if we can do some research, yeah, perhaps, yeah, there are programs out there in Ohio that are designed. Yeah.
Yeah, I agree. I think most states or counties or even cities,
Yes.
at some municipality level, there has been small business relief. So we definitely encourage you to look into those options, no matter where you're located, especially because many of them can run concurrently. So you can, some of them are exclusive, but you can sometimes get support from multiple sources or qualify for support from multiple sources.
Yeah, and if I could just add to that, I think one of the best resources wherever you are the small business development centers or an SBDC. So if you Google Small Business Development Center in your area, every county or cluster of counties throughout the country has one, and they're free, subsidized through the government. They probably are the best resource for you to start with to find out what may be available in terms of COVID relief in your local area.
Awesome, thank you. Okay, we had a couple people ask about receiving a copy of the presentation. So just a reminder that we will be sending out the recording of this discussion shortly after we wrap up today. So everybody can look back at the slides and then also review the audio portion as well. And then we had a question regarding bankruptcy that I wanted to ask Adriana and Shanna about AOF's policy around bankruptcy. Juan, thank you so much. Juan added in the chat that most traditional banks can support businesses if it's been at least 5 years since the bankruptcy. Is that the same for AOF, or is ours a little bit different?
Adriana, do you want to take that one?
Yes, it has to be discharged for at least 5 years, I believe. Yeah, and Shanna, correct me if I'm wrong.
Oh no, that's true for Fifth Third Bank. For Accion Opportunity Fund, we need the bankruptcy to be discharged for at least 12 months.
Okay.
So we do have some more flexibility there. And just to clarify, in case anybody has a question, if you do have an active bankruptcy, we won't be able to assist you until it's been discharged for those 12 months. And I know somebody had also asked about a line of credit, and Juan had answered for Fifth Third. Accion Opportunity Fund does not have a it does not have a line of credit option. Most lines of credit you'll find that are affordable, I should say, most affordable lines of credit you'll find through a bank, not through an alternative lender. Although people do use our term loan sometimes as a line of credit option, a pseudo line of credit, by getting the loan, paying it down for 6 months to a year, and then reapplying for more credit, and are able to kind of use it in that revolving sense because there's no prepayment penalty.
Okay, that's a good tip for sure. All right, and then we had somebody ask a question about how to apply most efficiently. So Juan added his contact information directly in the chat, so I will copy and paste this down. So if anybody wants to email Juan directly as far as efficiently starting the process with Fifth Third Bank, then I'll add that there. And then also on the AOF side, Adriana Williams, I'm going to add your information to the chat. It's also on the slide here for anybody who's looking at the slide, but if you want to click on it and copy and paste it from the chat, I'll put it there as well. So as far as efficiently starting the process or quickly sorting out how to apply, I think those are probably your best points of contact. Oh, and then we had somebody ask about factoring or invoice financing. Juan, are those products that Fifth Third offers? Anything about factoring or invoice financing?
No, not invoicing financing.
Okay, I think a lot of more alternative lenders or sort of online lenders provide like a factoring company is sort of a different type of institution from a traditional bank. Shanna, I know we've talked about this as another type of alternative product before, but those aren't products or lending products that we offer at AOF. Is that correct?
Correct. So, and just for anybody on the, for the benefit of those on the call that may not know what factoring is, it's just lending against your future, or excuse me, lending against your purchase orders. So there are lenders called factoring companies or that can assist by, they will take your purchase orders typically from large companies like a Walmart or a Costco or something, ones that they know will pay, and they will lend up to 60 to 80% of those purchase orders so that you get your money before your invoice gets paid. And that comes at a cost, when you break it all down, relatively high interest rate, but can be helpful, you know, so that you get paid earlier. And then once you do get paid from your vendor, then you'll use those funds to pay back your factoring company. Accion Opportunity Fund does partner with a couple of other factoring companies that are local in California, which is where we're headquartered, but they serve nationally. So if you have any specific questions, you can direct them to Adriana and we'd be happy to provide a referral. Otherwise, you can Google invoice factoring. There are some online ones that are convenient, but tend to be more expensive, as we talked about. So if you do go that direction, you know, feel free, just make sure that you go through that list of questions that was on the slide so that you fully understand what the fees and the rates are for that. But it is a good alternative financing option as well.
Mm-hmm.
Oh, sorry.
No problem. I was just gonna thank you for explaining it, because I think it can be a little bit confusing because it's not a traditional interest rate the way that a term loan would be. And so I think it's helpful to kind of understand what to look out for and just be aware that it might really help timing wise, but also might be a more expensive option.
Right. Yeah, and if I could just address a question that was asked early on in the chat while I was going through my formalizing your business. Someone asked, how can you formalize your financial statements if you currently have zero revenue but lots of expenses? And I've certainly been there. I used to have a startup many moons ago where we never had any revenue and just a bunch of expenses going out. We used an accounting software to track the expenses, and that will help you, you know, still understand where your expenses are going. Are they going into product development or research, or are you buying marketing or personnel? There's lots of accounting software options out there. If you're looking for investment or things like that, investors and other startup lenders may be looking for those types of financial statements. So the more organized that you can be, you know, the better off, or more prepared you'll be for when questions come up about like, where is your money going? So even if you have zero expenses, I think zero revenues, it's still a good idea to invest in an accounting software so that you can keep track of them.
Right, Shanna, I totally agree. I feel like this is something you and I end up talking about a lot, of just how important it is to keep track. And for so many different reasons, whether it's another interested party or just for your own self, just to know how much money you spent on marketing last month so you can see if it's effective and, you know, that kind of thing. I think it's so important just to get organized as early as possible. I think we've all had clients in the past who said, oh, well, I'm just getting started, or we're not that big yet, or something like that, so I don't need to do it yet. But it only gets harder. The bigger you get, the more you grow, the harder it is to implement those processes. So the earlier you can get on that train, the better. All righty. And as we wrap up here, I also want to provide a little bit of detail about something that you see on this slide here about information on one-on-one coaching. So this is something that Accion Opportunity Fund provides to any small business owner. It does not have to be somebody who has a loan with us, can be anyone interested in one-on-one coaching. We have expert small business coaches on staff who would be happy to speak with you about financing options, business planning, marketing strategy, kind of any business topic that you would like some one-on-one support with, we can support you there. So I'm going to put information in the chat about resources that Fifth Third Bank offers and also that AOF offers, but I did want to make that call out about the advising opportunity through AOF, that you can email advising@opportunityfund.org and get in touch with one of our business coaches that can help support your business. All right, and just a little bit more time for a couple more questions. About the coaching, is there investment required for coaching or advising? No, all of our business coaching is completely free of charge. So feel free to get in touch there and we will help you out. We had, this is a good question, Shanna, about a financial software that a business can use that doesn't cost very much. We get this question all the time because I know QuickBooks can be kind of expensive, and there's other even more robust ones that can be kind of expensive. But do you have a specific or a couple maybe softwares that you like to recommend that are on the more economical side?
That is a great question, Meredith. And off the top of my head, I don't, but would be happy. It looks like there are some good recommendations here. Wave, Sunrise app, or FreshBooks.
Yeah, those are all great.
Thank you, Nicole.
Yeah, thanks, Nicole. And then another one that I have heard really good feedback from clients about in the past is Xero, but it's Xero with an X, so Xero. And Juan says that Fifth Third also provides free financial consulting. So that's just another really economical resource as well. Okay, so I'm going to type in the accounting software options because I know we kind of ran through all of those quickly, but we said Wave and Xero and Sunrise and FreshBooks. All right, so everybody can see those to look at. So great. Feel free to, we don't have any like sponsorship or anything with any of those. We just have heard from clients that some of those are the ones that work well. All right, and somebody else in the chat recommended that Mint is a good one as well. Thank you, Jason. So Mint is really great for cash, like cash flow tracking, and you can use it personally and for your business as well. So if you're wanting to take a look just on the personal side of the money you're spending versus what's coming in, that's a really helpful tool that you can use for personal or business. Mint is really good for that. All right, I think that's all of the time that we have for questions. I think we've answered everything or almost everything that we had coming into the chat. So I just want to give a huge thank you to Fifth Third Bank for continuing to partner with us on all of our educational resources. We're so glad to be such highly collaborative partners with you all. And I also want to thank Juan and Adriana and Shanna for all of their insights and information that they shared today. Thank you so much to our presenters. And also I want to thank everybody who stuck with us and learned with us today. Investing that time and learning for your business is always going to give you a great return. So appreciate you all. And we hope that you feel more prepared to pursue working capital options for your business. And we hope you have a wonderful day. Thanks, everyone. We'll see you next time.
Thank you, everyone.
Thank you. Have a great day.
Yes. Thank you.